right, let's get started. So GBP NZD for today, continuing our backtest series in 2016. We left off at NZD CHF, which was a decent pair. We had Euro JPY, decent pair. UJ, also pretty decent. Could be our first losing pair. We're not sure yet. I think overall we've got right around the 80 trades mark, something like that. Maybe a little bit more, maybe a little bit less. I'm not entirely sure, but we're going to get right into it. I'm going to be pulling up the chat over here. And let's get started. All right, so far, nothing. I am going to be asking you guys as well. For those of you watching this on YouTube, we are currently doing this on call. I'll be asking you guys on call what you think about these setups. So what do you think about this trade over here, guys? Would we say that this is a valid trade? The one that I just marked out. BC criteria, breaker structure plus FVG. There you go. Simple as that. Really, that's what it is. It's so extremely simple. Eventually, once you've done it a billion times, you get to the point where you're like, okay, you know, it meets the criteria, and boom, there you go. What about this trade, this continuation here? Yo, Thomas, what's going on? Way too conservative, trying to be more aggressive. Okay, it's good that you mentioned that. Josh says liquidity. So liquidity, what I always say, is a little bit subjective. I've mentioned this in previous calls as well. I believe that liquidity, excuse me, is subjective in terms of everyone sees liquidity differently. So you can see liquidity pretty much everywhere. It kind of depends on your view on liquidity. Like, oh shit, I did not mean to do that. Well, let me go back. Okay, as in you can see this as liquidity, but there's also going to be people who say that this needs to be grabbed entirely before we can say that that is liquidity, which is why I believe that liquidity is a little bit more subjective, which is why personally I try to be more aggressive with my entries, because I believe that way it's a lot easier to stay consistent with what I'm doing, if that makes sense. All right. Perfect. So the way to be a little bit more aggressive, especially in the beginning, right? The important thing in the beginning is not necessarily to, that should be a break even. I'm not sure if it counted that. Especially in the beginning, your main goal is to collect a lot of data. Your main goal is not to get profitable results. A lot of people think that at first their goal should be to get profitable data. Not at all. The goal is getting a decent frequency, getting an okay win rate, stuff like that should be your main focus. After that is when you can look at the results and you can be like, okay, this is profitable, this is not profitable, stuff like that. But at first, no reason to really worry about it. Similarly, there's a lot of traders who will focus on the outcome of 1 or 2 trading sessions. They'll do a couple of trading pairs. They'll do a couple of pairs of backtesting. And they'll be like, oh shit, this one is bad. This one is doing good. This is not profitable enough, 29%. But it's the compound effect of having all of these pairs combined. And then some of them are a little bit more. That is not too aggressive. No, I was going to take that, but it already went past that. So that's why I took the upper one. Some pairs are going to be a little bit more profitable than others, obviously. And you cannot really make a choice based on just 1 or 2 pairs. All right, so I missed this trade. We can look at the upper one here. I did miss the early one literally because I'm just too late. So I could either miss out on a win there or avoid a loss. Let's see. All right, that looks like it would have been a loss. This is, yeah, this is a trade that I would delete for the fact that it got really close to my entry, then break even. Why are you using the lower leg first? So in my opinion, if you want to be more aggressive, you always go for the most recent structure. So being more aggressive goes hand in hand with going for a recent structure. Being more conservative means going for the higher, more external structure, in my opinion. If that makes sense. Eurgen asked me, do you take, hold on, let me quickly let the trade play out and then I'll get back to you. That's a break even, got really close to my take profit. BE. Okay, he asked, do you take the first break structure, which is counter trend, or wait for the second break structure? I always take the first one. So I believe in, you know, looking at stuff at it as if it's counter trend or you know, continuation. It's good if you want to increase the probability of winning a trade. However, the main focus right now is literally being aggressive and getting a decent frequency, for me at least. So that means I'm going to be very aggressive, and that means I'm not focusing necessarily on a confirmation entry, which is basically what you're mentioning. All right, this is not the entry that I should have gotten. I got in a little higher than I was supposed to, but that's okay. That ends up hitting break even anyways. Which is fine. And then we're on to the next. Is there a new chat, or is that, oh, that's the purple notification. I was like, what the fuck is that? Okay. Oh shit, I said the F word. Now I'm not going to get monetized on YouTube. Damn, that sucks. All right, it looks like we missed this one. Might have missed out on, oh, that's a losing trade that we missed out on. For those of you on YouTube who are hearing the soundboard right now, that is something that we do in the community. Something that we like to do. All right, let's see. This is valid too. Is there an FEG? Yes, there is. Looks like it is the Sunday opening gap. It looks like we did miss out on a trade over there though, which would have been a losing trade. Right now we are getting lucky because I believe we missed out on a trade twice. Oh, never mind. I didn't take that. Why I posted that. I believe we missed out on a trade twice, and it was a losing trade. But obviously this also happens the other way around. You also miss out on winning trades, right? So it really happens both ways. Another trade, fairly aggressive, but totally valid. Which is why I'm backtesting. I wouldn't really be like, oh, I would have taken that. I would have done this. I would have done that. Is that a loss? No, it's break even. I would say let it play. Let it play out, really. Because if you lose, or if you miss a winning trade, or if you miss a losing trade, that's pretty realistic. Because in reality, that's what's going to happen too. You are going to miss a winning trade. You are going to miss a losing trade sometimes. That's literally the way that it goes. All right, in this case, which leg do you take? Which one is valid? Which trade is the most valid? Well, both of them are, really. Both the bottom leg, so this leg is valid, as well as the upper one. The upper one is just a little bit more aggressive as opposed to the lower one. But like I said, both of them are equally as valid. All right, this ends up hitting break even, gets close to target. This is the point where a lot of traders will get upset. They'll be like, shit, it got so close to my target. Maybe I should lower my RR ratio to 2.9 or 2.8 instead of 1 to 3. And then I'm like, don't change things based on the results of just a couple of trades, really. You don't want to change based off of that. I remember, I think it was last year in the summer, Simple Markets was fairly new back then. We had a couple of members, and one of them was like, he came from another community. He was like, I'm going to change based on, he was like, I'm noticing that the summer tends to be a little rough. And I was like, what are you basing that on? And he says, well, I've just been noticing in the past couple of weeks, and I'm gonna change my RR to I think it was 1 to 2 or something. I was like, yeah, you can do that, but if you're not basing that on, you know, statistics and data, and you know that you don't know for a fact that that's going to be a lot more profitable, then what are you doing? And he's like, yeah, okay, maybe you're right, you know. But a lot of people will basically change their trading based on what they think they know is happening, if that makes sense. They think that they know the markets are going to do X, Y, and Z. They have no idea if it really is going to do that, but they think so. And that's what they'll base their trades on. And you'd be surprised how many people think that they know what the market is going to do. Well, I'll give you a quick little secret. You don't. Nobody does. You acknowledge the spread. They're like real markets. The last winner you took, which one? That one. There is a really good chance, yeah, that would have stopped me out. In the live markets, that spread right there, that could have taken you out. Which is why I think you're fairly new to. I always mention this. If you're going to be trading and you've backtested, let's say 1,000 trades, and your total RR is 550 R, then deduct 50 R from that and count that as error margin. You can say like, okay, that's, you know, spreads taking me out. That's whatever pretty much causing me to be unprofitable right now. So I'll show you in a second. Let me pull that up. Let's say you got a lot of data like my good friend Nikki over here. You've got around 400 R in a couple of, 2,000 trades. Perfect. Take a good 40 R off of that and count that as error margin. Days where you might be sick, days where a spread might take you out, days where you might have to wait for your prop firm to refresh, whatever. All sorts of things that can lead to you basically not being able to take that trade. And that's what you're going to call error margin. So, because otherwise people will blindly stare at their data and be like, shit, why is it not exactly the same as my data is? And that's why, because your data is a really good measurement of your strategy. However, it's not 100% accurate. It's not going to be exactly the same. Like you said, there's going to be moments where you have spreads. There's going to be moments where you're going to get stopped out. You're going to get fucked over by a prop firm. Prop firm's not going to want to pay you out. Stuff like that, really. All right, next one. That is valid. Both of these are valid, by the way. They're a little bit aggressive, but you show your monthly results for 2025 when you're done. Yeah, sure. Sure. We're in April now, going a little slow, to be honest. I always like to maintain a little bit of a faster pace, but you guys also know that when I'm doing the whole talking thing and being in a group call, it's a little harder for me to back just fast. Oh shit! Okay, that's a loss. When are you buying the Porsche? I don't think I'm ever going to buy a Porsche. You should check out the start of this call too, Thomas. I was showing people exactly how much I made from SMA and YouTube. My first YouTube payout was like, I think $88, I think it was. It's going to need 1,000 more of those YouTube payouts to get the Porsche. $100,000. Yeah, I wish. Down payment went through. It's crazy to see how differently we trade this strategy. I was super conservative with this 36% win rate and normally less than 10 trades a year per pair. I'm gonna go crazy and test for the next month. Super aggressive setups. Good idea, really. You should test different variants of the strategy. That is funny though. It's what I say. It's like people will take this strategy and be like, okay, it works. Well, yes, it does. Obviously it does, but you're going to have to give your own twist to it, really. Like, it's not going to magically work for you because it works for me. You're going to have to basically, you know, change a couple of things here and there, try it your own way, go a little bit more aggressive, go a little bit less aggressive, see what works for you. that's kind of the approach to maintain when you're going to be trading any strategy, really. Let me answer that in just a second, Josh, after I've placed this trade. That's like break even trade. Data collection. DE. Here we go. Josh asks, do you think giving a little bit more space to your stop loss will be a good idea to practice? Not if you're on the 4-hour time frame, no. If you are on the 15-minute like yourself, yes, although do keep in mind that if you do that, you are obviously going to sacrifice a large portion of your risk to reward ratio, right? Because you're on the 15-minute time frame. If you want to cover spreads, you're going to have to extend your stop by maybe 1 or 2 pips just to cover spreads a little bit. And that's ultimately going to also lower your risk to reward ratio. So be careful with that. And FX Replay has a function which allows you to test with spreads on. I haven't done it ever, so I'm not going to do it now because it'll skew my data. But if I were to start all over again, then I would have done that. I would just test with that that feature enabled, and the feature is enable spreads and commissions, and that way you can see if it's necessary to actually account for spreads and slippage within your parameters, within your strategy, basically. All right, this is one that I will delete because I got really close to my entry, then got really close to my stop, or target, excuse me. So that's something that I would delete. I'm also using a different mouse today, by the way, so that's maybe also a reason why I'm a tad bit slower than usual. He says no FEG. There's one up here. All right, I'm going to delete that. Got too close to my entry, then got really close to my break even, or pretty much hit my break even. Something that I would delete. We're in June right now. Yeah, try that, Josh. Let me know how that goes. I'm going to delete that. Got too close to my target, then got really close to pretty much hit my break-even level. At what point is the break structure too high or too low, like extended too much? I'm not entirely sure what you mean. Could you try to explain? At what point is it too high or too low, or like extended too much? There's pretty much no gap in here. There's the Sunday opening gap, which I don't take into account. It's a loss that I would avoid it. If the trade just keeps running and your range is like small, you have an example? I'm not entirely sure what you mean. You mean like if it's, so you get that, you want to place the trade like this, and it just keeps running up? Is that what you mean? Like when do you delete it and move on to next? Yeah, okay, gotcha. I'll move on to new structure if one, it really just gets out of my frame. So if I lose sight of it, kind of like over here, if it just becomes too large to keep in my field of view, or if new structure starts to develop. If I see new structure, that's when I'll go and look at it. But also in this case, for example, right, this short is totally valid, but I also know that in order to take this short, I'm going to have to start zooming out a lot. I'm going to have to look at a different zoom level, basically, than what I'm used to. And that's something that I don't want to do. So I'm going to be looking at new structure instead. Does that make sense? It does. Okay, gotcha. Perfect. All right. This is valid. I think we missed that. Maybe not. Losing trade. -1. And the frequency that I get around when I repair is right around the, I'd say, 25, 30 trades, something like that, probably. All right, next one. You need to play the song Break Even and remind you of past times. Yeah. I'm fairly sure that the sound is still in the soundboard. I'm not sure if my OBS actually has it on. Let me check. Yeah, no, it's not recording my desktop audio. Should be now. Oh, so previously when you guys did the soundboard, YouTube would not have heard it because I didn't have it enabled on my OBS, my recording software. But yeah, Break Even. The song that I used to play because I hit break even fairly often, so we started to play the break even song. I'm going to be turning my OBS audio back down. Here we go. It's a loss over there. So what I used to do back in the day was, this has been a long time ago, back in the day. By the way, guys, in this case, you can take either this one or you can take the one down here. Either one is relatively aggressive. I'm going to take the one from here, and I would argue that this is one of those moments where I do use my experience factor a little bit more. So it'd be totally valid if you take it from up there. But once you gain a little bit more experience, if you you've tested thousands of trades like myself, eventually you'll start to kind of understand which one is. You know, it'd be really embarrassing if this ends up being a win right now. Okay, never mind. That's a loss, and that is a missed trade that we have there. Now, back in the day, probably back in 2021, I believe, I was trading full-time. I was a full-time day trader, actually. And that's where the break-even song came into place. I was a full-time day trader with Zach. I think you know Zach Thomas. I'm not sure if you know Zach, actually. Zach, he's in here as well. And we were day traders together. And we would trade the New York session. And we'd be playing music on Discord, just chatting to each other whilst we were trading. And then every time one of us hit a break-even, we would change the song that we were currently listening to. We would change that to break even by the script, and that's how that became a trend. It's like the unfunniest thing ever, but we loved it, and we repeated it probably a million times up until the point where people got really sick of the song. What's his Discord username? His Discord username is David Goggins. It's been like that for years. From your backtesting experience, have you found any pairs that you lose consistently? Should you just avoid them in the live markets? That's a good question. The answer is no to both. I have not found any pairs that lose every single year, and then even then I would not delete them necessarily, because you are obviously swing trading. So when you're swing trading, it doesn't really matter if a pair loses a couple of years in a row, because eventually it's going to be the pair that will make up for all the losses next year, for example, right? So I'm not really too worried about that. It's the reason why I don't really avoid a pair that has a losing year, for example. So if 2016 or 2016 is a losing pair or is a losing year on GBP NZD, I'm still going to trade it in 2017. I'm not really going to let that affect me. This is a missed trade. That would have been a break even, I believe. Yep. So no, I don't really let that affect me, and I don't really change anything based on that. You know what's funny too? Every single day, ever since I've gotten a little bit bigger on YouTube, well, bigger, quote unquote, I've got like 13K subs, which is decent, but not huge, obviously. Ever since I've gotten a little bit bigger on YouTube, I've been getting calls every single day, and I don't know how, but it's just like every single day I'm getting all these phone calls. Famous. Is using the fractals indicator not a good thing? In my opinion, no. I don't think it's a bad thing. I think it's just something that you want to, you know, it's like playing the piano and then having the letters basically marked out, like marking out the keys on the piano with a marker, with a magic marker. I wouldn't do that. I personally prefer like just learning it and just understanding it myself. I don't want to have to rely on any form of indicator. But yeah, it's like you know, playing guitar and marking out the frets with a stick or whatever. I just think it's better to learn it by yourself, really. But that's not to say that if it really helps you, then, you know, by all means, go ahead and do it. For me personally, it's just not the way that I would want to learn something. We're close to September now. We're going to be taking this from the highest point. You can also take it from up here, really. It doesn't really matter. You can take it from here, 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 here. It's kind of a matter of how aggressive you want to be. If you want to be extremely aggressive, well, you can take it from here. We already missed that. Then you can either take it from here or here. Does not really make a difference in the long run with your results. At least not in my experience. That's a break even. Is that not a break even? I think that counted it as a loss. That was a loss then. We are in September now. Loss. And that's funny because now you see that we have a losing streak that basically wiped out all of the profits that we did make. We're in a losing streak of, what is that? I believe 6 trades now. Yeah, 6 or 7 trades. And all the profit that we had made earlier is all pretty much gone now. And then a lot of people will be like, shit, well, this does not work. What do I do? Do I change my entire strategy? No. You stick to it and you don't change anything. What keys are you hitting to skip the SS? I'm assuming skip forward. I'm using a screenshot. That would be Control Shift S. Copy image is Control Shift S. It's the one that I'm using. And then Alt B is the one that you can use to place your order. So you'll select a drawing tool, and then you click Alt plus B, and that's the one to place your order. Yama is asking, how many pairs should you test trade provided they're not correlated? How many pairs honestly, in my opinion, every pair. I think you should test every single pair for multiple years too, to to know for a fact your strategy works. And it seems like a lot of work, and it is a lot of work. But then again, it's either that or, you know, going around in circles for the next 5 years and then getting back to this point and being like, oh shit, I should have backtested all the pairs. I'll show you in a second. This is not correct price action rating. No, that's fine. High, low, higher, higher, low. Pretty much going for that. You're saying that this is a break to the downside. That is valid. Yeah, you could be looking at that short too. That is valid. Yeah. Why is that not letting me get into that trade? Limit order, please. Jeez, this platform is so slow. There we go. It's a winning trade eventually. But yeah, let me show you actually that, you know, it's obviously you're gonna have to put in a lot of work, but it's either that or going around in circles. And I'll show you this guy Mike that works with me. He started a while ago, probably a couple of I think he started 3 or 4 months ago with trading in general. He had never traded before. June 17th is when he started, and right now his overall data is looking solid as hell, really. And he's tested 300 trades here, and he's also done, I think he's doing 2017, 176, 53, and he's still going every single day right now, and he has been since the last 2 months, really. And it's just the work that you have to put in. And then there's this other guy. I'm not going to pull up the chat because there's messages. I don't know what that says. But there's other people. I'll show Nikki, for example. You know, 300 trades here, 2,500 trades there. There's this guy who's absolutely insane. He's done even more trades. I think he's got close to 3,000 trades right now. You know, that's really the work that you have to put in. You buying those win rates seems crazy high. Oh yeah, for sure. No, they are. They're definitely high, but you got to understand too that some people will not always move their stop to break even at 1-to-1. They'll move their stop to right around here. So their stop is 0.03R, which counts it as a win. So technically it's not a 55% win rate, for example, but sometimes people will put their stops into break even or into profit, which counts it as a winning trade. So it's more towards the 35% win rate mark. That's something, you know, if someone shows you I've got a 60% win rate with 1-to-3, that's possible if they are taking into account their break even. You know, if you're going to count break evens as a win, then yes, you might have a 55 to a 60% win rate, which a lot of people do. A lot of people do take that into account and count that as a win. We missed this trade. Would have been a break even, I believe. But it's very realistic and arguably also one of the most profitable things with a strategy like this to get to around, I missed this trade, that would have been a, what is that? I think a losing trade or a break even trade. To get right around to the 35, 38 maybe win rate, that's kind of what you're going to get towards. And it's very possible, it's very doable. It goes hand in hand too, is what I mention all the time, is you can get a high win rate with a low frequency, or you can get a high frequency with a low win rate. Arguably, one is better than the other. I would say that getting a low win rate with a high frequency is better because it's easier to maintain in terms of you don't have to be specific about your trades. And also, you can just spam out the trade. So it doesn't really matter if you're sick or if you're unable to catch, you know, if you're unable to catch the trades. Or in your case, high frequency with a low win rate. Yeah, well, that's the learning phase, though. But that's what you're here for, you know. This is a break-even trade. I should have deleted that. I did not. That's a mistake that I made. We're going to keep that in. Well, that's normal though, I would say. I would say in the beginning, it's pretty much everyone gets that. There's hardly anyone who tests a strategy and is instantly like, okay, this works. I'm going to go on to the live markets. December 15th is when I stopped trading. So I'll skip to the end of the year. But that's really normal, honestly, in my opinion. I think that's not really anything to worry about. I wouldn't worry about it. All right, 40%, 25 trades. So far, so good. We're going to add that to the data collection section. We're going to be stopping the recording for YouTube here as well. So this is also, like I said, it's going to be recorded for YouTube. For the people watching on YouTube, thanks for watching. Check out the other episodes. DM me on Discord if you have any questions. See you in the next video. Obviously, like and subscribe is what my fellow member here says.